Jonathan, I guess it surprised everyone, and it will surprise the Fed even to get such a hot number. But as Roger Ferguson told us earlier, market expectations, they don't necessarily want a shock. That's not where the market is. It's not what they've been laying the groundwork for.
Right. Well, I think that this is one of those circumstances that actually may require the Fed to surprise the markets. What we saw in the data today was just a very broad-based increase in CPI. There wasn't much in the way of silver linings. It does look like there's not much sign that we've hit a peak in terms of inflation. And perhaps more concerning today, the Michigan survey data showing an increase in longer-term inflation expectations, which has to have the Fed worry about their own credibility. So it does seem to us that they're going to prioritize having to get in front of this and to try and reinforce their credibility with an aggressive move up here.
So you've laid out the case of why they should do that, but do you actually think they will do that, knowing this Fed and knowing how careful Fed Chair Powell is to telegraph all of the moves and to prepare the market for everything? Doesn't it seem more likely that he would hike 50 and lay the groundwork for 75, or at least leave that option open this time, which he did not do last time?
Well, we think that's a possibility as well. We do think that a 75 is likely either in this meeting or in the July meeting, but we think that the argument for doing it now is stronger. It has the biggest bang for the buck in terms of the effect on the yield curve, and it also sends the strongest message that the Fed is very serious about reinforcing inflationary pressures. But you're absolutely right. The Fed is always reluctant in a hiking cycle to surprise the markets. But I think that this is one of those circumstances that actually calls for an aggressive action that does surprise the markets.
Either way, we're going to have the hawkish rhetoric come back up. I expect Bullard probably and others to come out and say we're going to have to do more than even expected. What's going to be the impact on the economy, do you think?
Well, it seems for now that the economy is holding up pretty well. But, I mean, this is one thing that the Fed may have to just live with. They're going to create a much bigger problem for themselves if they're not aggressive here, because if inflation expectations start slipping, their job is just much harder, and they're going to find themselves falling farther and farther behind the curve. It does seem to us that they want to position themselves to address inflationary pressures if they prove to be more prolonged, and that the best way to do that is to get out in front of things and move the policy stance further towards neutral, and then they can react from there, depending on how inflation developments go.
Mike, what would all this mean for the stock market if we do get either a 75 basis point hike next week or talk of it at the next meeting?
I think it leaves the stock market in the place it's just about is already. It's interesting. I mean, the market seems impatient about all this, and investors are impatient, and they feel like they would love it if you could just get it over with. Wherever we're going to go, let's just get there. I'm not sure the Fed thinks about it that way, and they also, I think, very much relish their ability to use forward guidance to get what they want into the market. Look at over the last 6 months. You got the 2-year note yield go from 0.5% to 3%, and they just started hiking a couple of times ago. So it seems like they would like to be able to march us through this. You have mortgage rates at 5.85 right now for 30-year fixed. I mean, they realize that has an effect even if they don't move so fast. So maybe 75 somewhere in the next couple makes sense. I just don't know if they want to do it next week when they could do it 6 weeks later.
Got it. Jonathan, thank you for joining us with that call today. A lot of people on Wall Street talking about it from Barclays.